Wait. Oh.
Yeah, good morning, everyone. It's my pleasure to welcome you all to today's webinar. Thank you for taking your time to join us. My name is Kike Lomumbakugo, and I'll be your host for today's webinar. And I'm representing First Registrars and Investor Services Limited. I warmly welcome you all to today's webinar titled Capital Raising for SMEs, Exploring Funding Options for Sustainable Growth. So for this session, it's going to run for just 1 hour. And for viewers in the house, we would like to have you send in your questions as our guests speak to the topic of today. Send in your questions. So as we're wrapping up, we'll address every one of your questions. So it's a privilege to have today in the house Mr. Wale Adepoju, our speaker, FCA. He's also the head of our finance and accounts for First Registrars. And with me in the house this morning is our moderator, Honorable Mrs. Mudupeola Akombi. She's going to be our moderator. So I'll leave the floor for her to properly introduce our speaker and take up from here. Thank you.
Thank you so very much, Kike Lomo. Welcome, viewers. We are so happy to have you here with us once again. It's been a wonderful new year, and we want to use this opportunity to wish you a happy new year. The last time we saw it was 2025, so welcome to a brand new year 2026. As our guest today is Mr. Adewale Waheed Adepoju. Um, I'm just going to give you a brief rundown of his profile so that you can get to know him. Mr. Adewale Waheed Adepoju, FCA, holds a Bachelor of Science and Masters of Science degrees in economics from the Universities of Ado-Ekiti and University of Lagos, respectively. He holds an MBA in Financial Management from the Obafemi Awolowo University, Ile-Ife. He is a fellow of the Institute of Chartered Accountants of Nigeria, ICAN, and the Institute of Capital Market Registrars, ICMR. He is also an associate of the Chartered Institute of Taxation of Nigeria, CITN. Currently, he is the head finance and management accounts in First Registrars and Investor Services. A very resourceful person. He has vast knowledge in financial advisory, investment management, tax management, audit, and quality assurance. Adewale is married and blessed with children. Once again, you are welcome to this webinar. Thank you so much. So, Mr. Adewale Adepoju, we know that in the Nigerian environment today, the macroeconomics and the micro economics are a bit stiff and difficult for a lot of people to navigate, more so for small and medium scale enterprises. All over the world, we are aware that it is this segment of the economy that actually makes up the majority of employers, the informal sector. They make up the majority of employers in any country. And so if they have difficulties sourcing for funds to fund their activities, to fund their operations, then there's going to be issue of mass unemployment, because people who cannot raise capital for capital to run their businesses, and as well as make, at the end of the day, make profit and remain sustainable in the long run. So we are just going to, we just want you to talk us through the process of capital raising for SMEs, so that anybody out there can seek these opportunities to source funds and to create
actually source for fund. You understand? And so, but we need to talk about, to even divide SMEs. What do we mean by SMEs? It has to be in terms of the scale, the number of staff, in terms of your asset base and the employees and profit. So for SMEs basically in Nigeria, you understand, generally, the staff are, for medium scale enterprise, the staff are basically more than between 10 to 200, between 10 to 200, you understand, that make up the SMEs, and their asset base are not only more than 200 million, and so as such, they try to play in the technology, in the agriculture and manufacturing sector, basically to actually, for the purpose of generating business. So what they do is to actually try and survive and make end meet and employ people and set up business, and the main objective is actually to make profit, because they are not charitable organization. Now, so the reason why most SMEs in Nigeria are not as struggling is because of the fact that they are not well structured and they are not well balanced in terms of, they are basically in formal settings, even though what they are doing is good, but to generate fund, you have to be properly set up in terms of separating ownership from management, and also having a good structure to be bankable, to be able to access finance. For instance, an agro business in Ogun State that is doing well, that is thriving well, might really performing well, but not have proper documentation to be able to access fund from the financial institution. So that poses a really challenge. And the truth is that the SMEs are driving the engine room of every economy. They are the one that is driving the, in fact, as a matter of fact, they contribute to the large chunk of GDP of the economy. So SMEs play a critical role in economic development by driving the entrepreneurship, job creation, and inclusive growth. Like I said, in Nigeria and many emerging economies, SMEs are the engine of the economy, and with over 40 million, medium, micro, small, medium, and medium enterprises, employing about more 80% of workforce. So it means that the role of SMEs in the country cannot be overemphasized in the fact that they are the one that drive the economy. So even though as important as they are, it still become very important for them to raise funds together. So we want to talk about, okay, what are those things that they can do to be able to effectively generate funds? The truth is that because most SMEs are not well structured, mostly informal, they are just trying to survive. They do not try and do what they're supposed to do in terms of getting proper record to be able to access fund. So all right, so in terms of employees, type of definition, that is a number of factors, number of employees which I've talked about, and though the definition varies across various jurisdictions, there's at least about 200 people having about 500 million naira in terms of their assets, and they work with limited scale. Most of them they don't have the capacity to expand, but most times the problem is separating ownership from management. Has always been the issue with most SMEs, because it's one same person or group of people that actually set up business and that also want to run the business, and also so there is a mismatch. I mean, mixing personal money with the business money. So it become pretty difficult for them to be accountable. You understand? And so where you are not accountable, you might not be able to actually access funding, because For you to be able to access funding, you must be intentional about it, you must be well structured, and you must be balanced in terms of have your record keep record properly, you understand, and also do some business plan, your model and everything that will make you to be able to access funds. So the key importance of SMEs. Number one, they generate employment opportunity because it's the best form of job creation. Like I said, majority of they contribute about more than 80% of workforce in an economy, and they promote innovation and competition. So most SMEs drive to take risks and go into new line of business in terms of technology, agriculture, or even into trading. So they try as much as possible to try to be innovative. You understand that? So doing that, they need fund. They need fund because most SMEs start with using their own internal, own personal money, and also they also support local supply chains. So they're part of the chain that actually contribute to the development of the economy, and also they contribute significantly to the GDP and tax revenue. Of course, it is important for you to once you have revenue in a country, you are what you are expected to pay tax. You are setting up an SMS, anybody setting up the first thing is that you generate your fund, maybe for your personal savings or contribution for your friends and family. So that help you to even take it, start off your business. So that's the first line of generating fund, and this fund, and so when you look at your source for, the fund that you have internally, that also now extend look outward also what source for fund. Now the sources and funds that you are actually sourcing for, they can be used for the following. Number one, startup and working capital. So when you generate fund, first of all, maybe to start up your business, or to actually business that is continuing to actually finance your working capital, the running of your business. And also when you are now even like have established, you also want to expand or you want growth, you also need more fund. And so when you want to even acquire your capex, your capital, your fixed assets, property, plant and equipment, you also use fund to finance those funds. Then also when you also want to penetrate markets, when you have carried out an analysis and you want to increase your skill, so you can also want to penetrate, or you want to, you have research into and you want to develop new product, you also need fund for that one. Also when you want to finance your debt, so fund can either be gotten from either internal or external. Now, so those sources cannot be divided into three. We have what we call the short-term source, the medium-term and long-term source of finance. And so the short-term costs are those ones that you can use to basically to finance your working capital. It's the medium-term and the long-term that can use for acquisition of long-term investment, expansion and growth, purchase of equipment. Now, so the first one is equity capital, and the second one is debt capital, and the third one is hybrid, which is a mix of debt and equity. Now, looking at the buckets here, you can see the various sources of capital for SMEs. Number one, starting from personal savings, like I said, the savings you have that maybe for your own, or your money you take from your friend and family, it can be used to start an SME. And also from retained earnings. Okay, maybe you started one particular business before, and that business you have generated profits. So the profit that you did not even share, you did not spend, you retain, it can also be used as part of your fund to finance your business. Then also you can also go ahead and take bank loans. And so you taking bank loans, it means that now, like I said before, I said that most FSMEs are practically informal, except the one that they have developed themselves. So they always have issue getting bank loan in terms of requirements for you to get to, what bank require for you for people to access bank loan, and also so. But I believe that with the advent of the major SME startup, all of this, and the high net worth individual trying to finance the tech business. So the awareness is on now that for you to be able to access funds, you need to do what is right. And also equity investment. Of course, equity investment, that means that if you get investment fund from high net worth individual and they also have a stake in the ownership of that business, then looking at that bucket, that's what we call digital financing platform. There are digital financing platform that allow loans to be approved and also be dispersed within a short period of time. And also we have microfinance institutions, of course. In fact, microfinance institutions, SM, they play in this space a lot. They finance, they assist SMEs in terms of providing fund, and also micro investment. So what is micro investment? They are not accountable and they are not financially disciplined. They mix business money with personal money, so it becomes practically difficult for them to be able to be accountable. So that affects the sourcing for finance internally. Okay, but looking at equity financing, so that's one. It means that when you are limited in terms of resources, so you have some high net worth individuals that will share your dream and they will invest in your startup. As a matter of fact, those won't turn around the fate of your business when you share the dream. And for instance, they invest in venture capital, private equity. Those won't allow SME to grow fast, very fast. And also you can focus on stability, you cannot expand. So you cannot, meaning that if you are limited in resources, you cannot increase in your scope because you now have support from angel investor. So it gives you an edge over. And so the moment you are doing that, it means that your documentation and everything is ready. So for you to be able to access funds from Anet, they will have access your ability to be able to run the business so that you will run a grant. Now, so how can this fund be generated? Be traded? Now we have capital market options, SMA board, and growth market that is specialized and regulatory friendly. So these SMEs can also be traded in the NGX board, and also there's also a platform, crowdfunding platform. It could be for raising fund for their first needs. We go fund for personal and also Kickstarter. So we have various platforms by which fund can be. Now the implication is that equity financing means that you are no longer going to be the owner of the business again. It means you are going to extend ownership to other people. Yes, and control. So it's easy for management to be separated from ownership in this case. Unlike when you are running your business yourself, you are the owner and you are claiming owner for everything. But now there will be no discipline, there will be discipline, and there will be proper accountability. So, and the government, and also now government also can also support and fund your business. We have various grants from government, subsidized loan, capacity building, that can, they are unlimited as long as when you are well structured, your ability to have access to fund is guaranteed. Now, looking at another form of finance, we have talked about the internal sources. We have talked about that private sources. We have talked about the equity. Now, so let's talk about debt financing. Debt itself is not bad as long as it's used properly for the purpose for which it is meant for. So, if an SMS gets a debt and is used for that business, the process is there. So, and debt can be sourced either from microfinance or developmental bank at DFIs, and so there are some SME focused loan that is dedicated for the purpose of SMEs, and also the intervention fund from financial institutions like Bank of Industry, like NICSA, which is Nigeria Incentive Based Risk Sharing for Agric Lending. So what this one does is to reduce risk that happen in provision of credit for SMEs. So what they do is that they try to intervene so that they reduce the risk that's being faced by getting lending for agri business. So, and also a development bank, all those ones they support, and also and the microfinance also support in this case, and also help and give you fund in that regard. Now, all of these things are flexible and are targeted at growth. Then now you can also source fund from taking loan from commercial bank in terms of term loan, overdraft, trade finance businesses. So when you take a loan for a period of time, period of time, and you are paying, your ability to pay, like I said, debt is not bad once it can be used for what is meant purpose, and you have not extended the optimum level of debt. So meaning that if you take a loan from bank and you use properly the ways you use, as a matter of fact, before you can even have access to loan, the bank will have you look at your cash flow projection, your business model, and everything that you have done properly structured. So in that case, there is no hiding. So in that case, you've already structured your business and it's standardized. So in this case, it is easy for you to source for funds. So taking loan from bank, the only thing is that as those ones attract higher interest, and the structure repayment time. So you are enabling the supplier, and please give me, supply this thing to me, I'll pay. And the person supply, what it means that the person have actually granted you fund to buy that one. So with that one form, you have granted fund to you. So sometimes it might not be attract movement of fund. What you want to use that fund when you are actually gotten that one, or for sometimes you do invoice discounting. Maybe you made a supply to a particular company, and your money will be paid in future, and you need money now. You can also take that invoice to a factor or financial institution for them to discount it for you, meaning that they provide finance to you and they collect that money from later in future. So it's a way of giving you finance. So is this for what is key is your ability to be able to know what you are doing, and make sure you ensure that your business model is proper and you are well accountable, and you have proper documentation to be able to access those funds. In Nigeria, we have a number of SMEs that are thriving, and we have a number of high net worth that are doing well. A very notable one of the staff, that's Tony Millennium Foundation, which has invested about more than 20,000 SMEs across 54 African countries, and there is a fund that is actually dedicated about $100 million for that purpose, such that $5,000 is given to start up for purpose of improving their business, also for training and workshop. And those funds are not returned as cyberspace and visa fund, and we have a number of them in Nigeria. Once you can assure them and they can see. So it means that documentation is very key and very, very, very important. All right, so for you to be able to attract funding model, divide value proposition, what value are you adding, and then competitive advantage. You must be able to convince. So those are challenges. Then collateral constraint. There will be some condition attached to collateral requirement that might make it difficult for you to be able to meet up with those collateral. And then for financial literacy. So most, like I said, most SMEs are informal. They are just into business, taking risks, and also, so when the business begins to grow, they want to get more. So it means that they want to includes more, get more training, workshop, and everything. So include train themselves, train their workforce to do to what I said. Then weak financial record. Like I said, most of them are informal, so they don't keep proper record. Most of them always had their business with their money, so they cannot separate the business money from their own what business. Then lack of structure. Most of them, they don't have proper structure. But despite that, they still contribute largely to job creation and growth. Then most of them are not even aware of some of these options available, of funding options that they can. Most of them don't even know that they can even access a microfinance bank. Most of them don't even know that they approach a development bank or bank of industry for anything. So they have limited knowledge. So all of these challenges now make them to rely on short term. So it puts so much pressure on them, and so growth and scalability become very, very difficult. All right, so for you to be able to now do that, so what are the strategies for you to improve SMS? First one, make sure you register your business. Very key. So you must there must be a paradigm shift from what you are doing before. You must change your system, your operating model. So first of all, get your business registered, no matter how small you are. You must get your business registered. And as a matter of fact, now in Nigeria today, for you to be able to operate properly in the economic space, financial space, you understand that you must get your business registered. It has a number of opportunities, and also you maintain proper accounts, and also so that you must also use your business back. As a matter of fact, now with the advent of the new tax law in Nigeria, for you to be able to treat you, everybody has TIN, need to have a TIN. So you also need to have all those things. If you don't have your business register, it might not be easy for you to get a TIN. All right, so then capacity building. So you ensure, yes, you are informal, but there's support for you to what? Go for training yourself, and also your workforce. Expose them to training, financial management training, SMS training, and also then there will be various investment readiness programs. Then you also try and get mentorship and advisory support. So not only that, it's not only all the time that fund you are required. Sometimes it might be mentorship or advisory support that will take you out of, support you. Then also look at leveraging and alternative financing. Most people do not know that alternative financing can also help. Some of them even depend on traditional banking. So for crowdfunding, so means that make group of people support, come together and create what? A pool for to be able to finance. So you can also exploit that opportunity. So also supply chain finance, for instance, factoring, like I explained. For instance, if a particular my company is owing me and I need fund now, I can approach a factor to give me that money, pending the time that money will be given to me. So in that way, I can source for more funds. So people don't leverage on that alternative finance. So it's very important. You understand? So as a corporate financing and plus, in fact, most time people join cultural societies are also playing this SME field. Most corporate societies now have businesses that they do, and plus, in fact, they support and they play very vital role in driving SME business in the economy. So also the policy maker and financial institutions, okay, so they support, in fact, they are the one that creates the enabling environment for SME business to thrive. They give guarantee schemes, SME focus product, and even data-driven credit assessment. All of these things are what the government and they do. Okay, so the role of capital market, of course, so where long-term business and short-term, long-term financial instruments are being traded in the capital market. So the non-farm and, like I said, SME focus exchange plan. So they provide a platform for SMEs to be able to trade, to also exist, and also debt security, commercial papers, and bond. We have some SMEs that are mature. They can also raise through those funds, through the capital market. Then once you are trading in the capital market, it means that you have lost your secrecy and privacy. So that is what we call transparency and what good corporate governance structure. It means that once you mature SMEs, you must strive to want to participate in the capital market. It will help the business a lot. All right. So, like, even though capital raising is still very critical success factor for SMEs, why challenges persist? A combination of improved financial discipline, very key. You must be financially disciplined, you must be innovative, and also to provide solutions, then supportive policies, investment engagement, all of this together can significantly close the financing gap. All of this I mentioned can significantly close finance. So for sustainable economic growth, stakeholders must collaborate to create an enabling environment where SMEs can access the right type of capital at the right time and cost. Thank you.
Thank you so very much, Mr. Adepoju, for that insightful, very, very insightful delivery. I'm sure that our viewers have learned quite a bit about how to raise the various options for raising capital for SMEs. And when we are talking about SMEs, we all know that SMEs refer to small and medium scale enterprises. So we are speaking to the hairdresser out there, we are speaking to the fashion designer out there, we are speaking to the caterer out there, we are speaking to photographers, all kinds of businesses that operate out there, caterers, people who by reason of their services are operating in the informal sector, who have between 2 to 10 staff that work with them, and who are constantly in the business of providing services to those that need them on regular basis. So you are the SME, and we know that the challenges that a lot of SMEs face is is the issue of scaling up, how to access capital to ensure that their businesses keep running and remain running, which means that the essence of that is for them to remain sustainable and remain an ongoing concern in the future. So if you have any questions, please, we welcome your questions. Just throw your questions into our chat room. We'll pick up your question as we go along. But meanwhile, Mr. Adepoju, in the course of your delivery, you talked about the requirements that SMEs need to meet in order to access capital from financial institutions, banks, and possibly even microfinance institutions. So typically, can you give an example or a few examples of some of the requirements that financial institutions will demand from SMEs before they can give them loans? Because I know that a lot of people complain that when they go to banks don't cooperate with them, they don't give them loans, and if they even want to give them loans, they make very outrageous demand for interest on the loans that they are about to grant, which is one of the key reasons why these SMEs run away from taking bank loans. What are the requirements for SMEs? What requirements should they meet, or are they required to meet before they can access financial institutions loans?
All right, thank you very much. The first thing is that for you to be able to access loan from financial institutions, you must also get your company registered, whether a private, whether a small company, an enterprise. You must get it registered. Let it have a name, so you can separate. You must be seen. You must be a bin. So that will help you. So you can register that one with CAC. You understand? So getting your company registered is the key first. Number two, you have a proper accounting record or your financial record. You understand? And also you have a clear business model. What actually are you doing? You understand? So let the person that want to give you fund sharing your idea. So you must have a clear business model, business plan. So the model will be translated in your business plan, properly rated. You can consult professionals to help you do those ones. Even to register, consult professionals, of course, to register the business.
And of course, at First Registrars and Investor Services, we have a company secretarial and probate services unit, SBU, that can help you with your business registration, your business incorporation. So please Go ahead, sir.
So it's also your track record, your performance record, what you have done. Let the bank, financial institution see what you have done and where you have to do, where you are going. So you cannot just say you want to collect money. They are not charitable, they are not stupid. They must see what you want to do. So you must have a proper record and proper government structure. They will see all documentation is very key. So once you get those one, and the most evidence of your regulatory and tax compliance. So once you do that one, you must pay your tax. If you don't know, consult experts. You know, so once you are able to once you comply, you survive. You survive. But the moment you are cutting corner, it becomes pretty difficult for you to survive, because all of these documentation requirements will be asked by the bank. If you are able to meet all of those things, then you are fine. You are home and dry.
Thank you so much. Now, in the course of your response, you mentioned that some SMEs, in the course of trying to get away from paying taxes, they may not keep proper records. Now, what would you suggest for an SME that is too small to employ an accountant and not big enough to employ a financial advisor? How do they manage the entire process of keeping good financial records? Okay, let me just put it this way. For the average entrepreneur out there who is not really learned, who is not really educated, you want to go to, for instance, go to Alaba, go to Oshodi, go to my 2 or my 12, people who have businesses there who are not really learned. What kind of suggestion would you give to them that will help them to be able to overcome this ordeal of accessing fund?
Okay, thank you very much. Firstly, once you are in a business, no matter how small the business is, you must have an understanding of that business. So for you to be able to operate and play in the space of the financial world, first, personal development is key. No matter how small your business, personal development, you also strive for knowledge, because you want to make money. So you also develop yourself, engage. We're in the world of the internet now. You have to go into the internet to source for knowledge about how to run a business. But except you want to be operating within a small circle, if you want to expand, then you only to get employed. No matter how little, you have to get expert. Get an accountant. It might not be like an experienced accountant. You might get an accounting officer for you to get your proper. Or better still, consult with experts and let them give you advice. So they will advise you on your business on a regular. If you cannot do it yourself, but if you say you want to do it, it means you want to limit your scope. But as long as you want to expand, you cannot but develop yourself or engage experts or employ capable hand, because those are the requirements for you to scale up, except you want to be operating within the local community you are.
All right, thank you so much, sir. There's this concern for SMEs or for small-scale business owners that they want to actually access fund, but there's this fear of actually losing their business. They see it as their baby. This is my idea, this is my baby, although I'm restricted by funds and I want to go all out there to get support, but at the same time I want to still be in charge of my business. So how can they navigate through sourcing for fund, going out there either through contributions from friends or through the microfinance bank or structured organization, and yet still gain retain ownership of their business?
Thank you very much. Well, that is to say that you cannot have your cake and eat it at the same time. Well, if you want to own your business yourself, nobody stops you from owning your business, but it means that there is limited level of scalability.
Yes. You
understand? And so there's limitation to whatever, how much you can grow. But if you are looking at growing and expanding your business, like I said, it is better to have 10% of something than to have 100% of nothing. So if you allow other people, because those people that want to be equity, you might, for instance, if you don't want equity base, you want them to share, so you can also look for your friends, your other form of informal form of getting fund to your business, but that will still limit your scalability. But the moment you move further to allow people to share your business, support you, you understand that? You also gain, they also gain.
Yeah.
You understand that?
It's a win-win.
It's a win-win situation. So depending on whichever you're okay with.
Yes, and what comes readily to mind is, I mean, we all know Dangote. He could have just decided that he wanted to go it all alone, but the sheer massiveness of the project that he embarked on, that's the Dangote refinery, at some point he could not go it alone. He had to bring in investors, and we know that even the federal government of Nigeria has some stake in Dangote refinery, albeit a relatively small one. And I want to also believe that outside the federal government, some other entities may also have interest in Dangote refinery. So if he had remained, if he wanted to babysit his project and saw it as, this is mine, I don't want anybody to come in, I don't think we would have Dangote refinery as we have it today, and we'll probably still be paying some very outrageous amount for purchase of fuel, like we started out with about a year or two ago. So really, I want to go with our speaker that if you want to scale up your business, if you want your business to do well, and if you want your business to outlive you, then you have to just get used to the idea of sharing your vision with other people, and being willing to to access funds that will help you to scale up and become a bigger entity, a more productive entity. So thank you so very much, Mr. Adepoju.
One more question, One more
Okay.
question for our speaker. Is it possible for SME to actually go all out to raise funds too early? There are times that you birth an idea, you're into business, you know that you need fund, and you just feel, I want to have all the fund right now, I want to just, start up big, I want to do, at times you dream big and you want to start up big. So is it possible for a business owner that actually wants to raise funds to go all out to raise funds too early? And if they do, what do you think can actually go wrong or affect the business?
Okay, so that's the reason why we said there must be a proper financial documentation, do a business plan. It's a business plan that will let you know at what point fund you have. You understand that? For a startup, no funding are into categories. It might be fund to start up a business, or funding for your working capital, or funding for expansion. Depending on what, if it's to start off your business, you start small. You understand that? You start small first. And for you to start small, like I said, the easiest form of funding is your personal savings. So you start with your personal savings. But you cannot, for you to be able to get access from outside that, they want to see what you have done. You understand? So you must be able to
your records.
Your record. And that will be translated into your proper financial documentation, your financial discipline, and how much have you complied with the regulators and tax. Very key. You understand that? So that they investors are rational. So they are not bringing money just for the bringing of for sake.
Yeah.
No, they also want to get return back.
Yeah.
So they want to see that, okay, this is a serious business that we can invest in. But the moment they see that what you are concerned about is just getting money without a clear direction of how you want to spend the money and utilize those resources, it might be difficult for you to access funds.
Okay.
Thank you so much.
Thank you for that, Mr. Adepoju. Now, would you like to speak? I would like you to speak to the risk associated with each capital raising option. I mean, there's everything in life is about risk.
Yeah.
And I'm sure that even all the options that we have looked at in terms of personal savings, in terms of family, in terms of friends, microfinance, banks and government funding, all of these options have their associated risk to them. No, so for the kind of entrepreneur that Kike just described, somebody who has birthed an idea and who wants to scale up, but is at the same time afraid of losing control, or any other entrepreneur out there, what are the various risks associated with each capital raising option that will enable that individual or entrepreneur take an informed decision? Oh, I'm not going to take this option, this is the best option for me, so I'll go with this option. So would you like to speak to that?
So if just a small scale enterprise that is operating on, as a matter of fact, setting up a business is a risk on its own. You understand that?
Correct,
So,
yeah.
So it means if you do not want to take a risk of losing the control of your business, so you must operate within your circle. But the issue is that you have limited access to fund. So you cannot get much fund if you still want to be in control of your business. So if you're okay with that, fine. But if you don't want to control, you can also take a risk of what? Approaching financial institution to get what? To get a loan. Those ones also attract its own risk. You have to be able to what? Pay interest on loan and even prepayment of principal. So now your ability to actually drive your business to be able to prepay the principal and business lies on you. You understand that? So sometimes loan kill business because people do not plan properly and the money is not used for properly. For somebody gets loan and they go and marry wives. You understand that? So you understand that? So and bank and so even if you take loan from your friend, you understand, and you do not utilize properly, you become that. So it's also at a cost. When your friend has you are not serious about it, he can even what seize your business. So you also go with risk. You understand? So if you don't want to scale up, then remain within yourself. So it means you have limited access to fund. If you want to scale up, or you take loan, or you can also go to bank, intervention bank, government. Now, okay, governments also have some like NASA, grants. Okay, so you can also operate within.
What are the risks associated with government grants?
No, so the intervention, it doesn't carry so much risk, but the issue is that for you to be able to access those, you must have proper documentation. That's very key.
Yeah, agreed.
You must be a registered business. You understand? So you must carry proper documentation. The risk associated with that one is that maybe change in government policy or change in government. You understand? So a government can take a policy and give you grant now. Another government can say no. You understand? So that will be the risk that can happen when it's government. But for
financial institution,
you must be able to raise. Properly. You must be able to what? Be financially disciplined.
Are there risks that are peculiar to raising funds from financial institutions? Because from conversations with a lot of SMEs, the reason they don't approach banks is because of the cutthroat interest rates.
And I think also
would you count that as a risk?
Collateral too can be.
And collateral and the kind of demand for collateral that they have.
The terrain we operate in Nigeria, your return on investment, you must be able to match it with the cost of getting fund. If the cost of getting fund is high than your return, it means you are operating at the business will be at a loss.
At a loss.
You understand? So that's the problem. So meaning that you got a fund, for instance, they also risk peculiar to a particular business. You borrow this, and people that you put in charge of business are not managing that business properly well. Because if you're not well managed and proper, but you do not put capable hand, you do not put in a proper government structure in terms of assurance, of auditing, governance, the stewardship, accounting for you. If you just allow that business to be there, then they will run the business grant, and you have the bank will have to collect their loan. So and it might even be some of your property that you have used as a collateral. Once you are unable to repay fully due for a certain period,
then you forfeit that.
In fact, it might even be your business property that they will take, and that's the end of that business.
Yeah, so that's a risk in itself.
So you must be financially disciplined. There must be proper governance structure. You understand? So separate business, then you bring in capable hand, and your business must. So the business must be well managed. Very key. So if it's well managed, and so if you want to approach fund, you have to even analyze. So you need experts to help analyze for you. Yes. You can't just take loan for loan's sake. What are you using that loan for? What will be return on that investment before you can accept that loan? Okay. Otherwise, you look for other source.
Okay, so from what Mr. Adepoju has said, the risk involved in accessing these loans, these various options of raising loans are one. Let's start with the government funded facilities or loans or interventions. That one comes with change of government, change in policies, and change in direction of the government itself. And then when it comes to financial institutions, the problem of high interest rates, then a loss of collateral if you are not able to meet up with repayment of your loan, as well as maybe loss of even the business itself if you eventually cannot pay back. So those are serious risks that individuals have to contend with. However, when you look at it from the personal aspect of it, on the small scale aspect of it, even when you borrow money from family and friends, there's still risk involved. If you are not able to, if you promise a friend or a family member that you are going to pay back at so time, and the business falls through and you are not able to make enough profit on the business as you had envisaged, this family and friend, depending on the agreement that you have gone into, may seize your assets or even seize the business. So you have to really look at it vis-a-vis the option. You have to look at the options vis-a-vis the kind of business you are doing, the turnover of that business, maybe on monthly, on annual basis, and how well your turnover will be able to meet up with your the interest that you are going to pay on any of these options. Now, Mr. Adepoju, in recent times, maybe about a year, 2, 3, 4, 5 years ago, we had this very popular way of raising funds, crowdfunding. It was all over the place, in agriculture, in various aspects of the economy. People were just talking of crowdfunding. Would you like to speak very quickly to crowdfunding as a capital raising option for SMEs, and how would it benefit them, if at all it will?
All right, so the first thing is about the sincerity of purpose. You understand that? So crowdfunding just means a pool of funds from different people. You understand that? And also people have various diverse of resources. You understand? So getting resources from people make life easy for the business, also make life easy for those that contribute those funds. So crowdfunding means that the pressure is not on one person. The pressure is not, this risk, the fund is spread across several people in a pool that continue to support that finance. What matters most is that the sincerity of purpose of that business. So if it has been tested, now the issue is that there have been crowdfunding of business, people have gone asked their finger burnt. At the end of the day, they will promise return, At the end of the day, what was promised or what they will get. You understand that? So, but that's why I say that it's the sincerity of purpose. If there is, of course, I don't want to mention it, we won't mention crowd. There's a particular business that's will come to mind. Sure, understand. Another one, sure, understand. So, but if the business is very sincere and everything, it will grow. But so what will now happen to crowdfunding is that if people have tested it and they got their bigger for people withdraw. But if they're fine, then it will what? It will begin to multiply. But crowdfunding is just spreading of that risk base, you understand, and creating a pool of funds from diverse range of sources, you understand, to support the business. It's a very wonderful way of raising capital for SMEs.
Yes, it's a wonderful way, but it carries a lot of risk. Like you said, the sincerity of purpose, because we know that in the last decade, there have been different entrepreneurs, so-called, that came to the public to crowdfund for their businesses, and at the end of the day, both the business and the crowdfunder, the so-called entrepreneur, were nowhere to be found. So when you also want to consider the option of crowdfunding for your business, Mr. Adepoju has spoken to the fact that you have to have sincerity of purpose. You must be honest in whatever decision that you take. If you are taking people's money, you must make sure that the purpose for which you have sourced this fund from the crowd, you use it for that purpose, and then you give a return on their investment to them as at when due, so that you don't end up sitting in kirikiri or at panty after you have collected money from the public. And so what are the future trends that you see for SMEs? What are the trends that you think that SMEs should be aware of in the capital raising landscape in future?
In fact, as a matter of fact, the future of SME is still very, very great, very, very bright. You know, so I will encourage because like we said, if you look at the composition of SMEs in Nigeria, in China, in India, they constitute majority large chunk of the workforce.
Yes,
You
that's
understand?
correct. Yes.
So the future is very, very bright. But what we have said is that for you to be able to play effective in that space, you must be properly accountable, get proper documentation, get a good business plan, get good governance structure. What's that one is? And you must be you must comply with what established regulatory and government requirements. Once you put all of those in place, then above the sky is
the sky is not your limit.
Yes,
It's just a startup.
Yes.
Wow, what an enlightening session. I'm sure that our viewers have actually gained quite a bit. We are speaking to you out there. If you are a player in the small and medium scale enterprises, there are lots and lots of opportunities for you to raise funds, to scale up your business, to increase your profitability on the long run. And do not be afraid of losing control, because the greatest businesses that you have in the world today started small, and they didn't just they did not they decided that this vision that they had was too big for them, and they invited other people to support them. They invited other people to share the dream, to share their vision, and with this they were able to scale up to become big. The companies that we call multinationals today started on a small and medium scale, just like you. The Dangotes of the Cadburys of this world and various other companies that we now look at as conglomerates, they started small. So if you are in that industry, you are a player in that industry, don't be afraid to scale up by sourcing funds from all the options that we have outlined for you so far. If there's any question, do we have any questions in our chat room? Any questions? So if there's no question, our viewers, we want to invite you. You can still have access to this webinar after this session. You can go to our website, or we are on Facebook, we are on LinkedIn, we are on Instagram, and you can just go there and take another look at this webinar. If you are a student, you are in the SME sector of the economy, you may want to just review this webinar later on so that you can learn from it and take the opportunities, seize the opportunities that have been presented to you for capital raising. So we thank you so much for the opportunity to once again be a part of your day. As registrars, we are into keeping records of client companies. We are also into various other businesses such as company secretarial services. We are into software development. We have Clay solutions, Clay web solutions, where we design solutions for various businesses. We are into KYC, know your customers. If you have any need for verification of identities, of certificates, we have another aspect of our business that operates in that space. We also are into probate services. So if you have need for
everything about life is risk, fine. And all of these options that we have tabled before us today have their own risk. But if you are guided, you will know, you'll be able to know your risk appetite and know the one to opt for. So I want to say a big thank you to our viewers and everybody seated here once again. The crew will say thank you to you. And to our viewers, we would like you to know that this webinar comes up bi-monthly. So our next edition will be in the month of March, and we'll be speaking to probate issues. So if you have anyone that have dead loved ones and they need to seek counsel or make inquiries about how to, go through navigating the estate of their loved ones, I think we'll be speaking to all of that in our next webinar. Till then, I want to say thank you and say see you.